Hello, everyone. Welcome to our special Market Outlook Open House for August 25th, 2025. I'd like to remind you the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware your risk in trading options can be substantial, so please make sure you are aware of all your risks prior to placing any trades. Also note that if we display any trades and results, consider them to be hypothetical computer-simulated trades and results, unless otherwise specified, keeping in mind that live results can vary from similar results for many different reasons. Okay, so let's move forward a little bit here. I'm just going to talk a little bit about what's going on in the community, since this is an open house available to everyone. And then I'm going to talk a little bit about the purpose of Market Outlook, and we'll go from there. So our next webinar is going to be Trading to Win, and that's going to be for our pro members, Wednesday, August 27th. And we're going to have that at 10 a.m. Eastern this week. And following that is going to be a Market Outlook, which is going to be Tuesday, 8:30 a.m. Eastern time, because Monday is a holiday. And then our trading market open is also going to be shifted to Tuesday at 9:25. And then our next Trading with the Pros meeting is scheduled for Wednesday, September 3rd at 1 p.m. Eastern time. And of course, then we have our Go Ask a Trader, September 10th at 9:30 a.m. Eastern time. Now, just a little bit about Market Outlook and the purpose for this webinar. By the way, we've done these. I think this is our 322nd episodes. We've been doing this since 2019, and as a Market Outlook member, you have access to recordings, and you can go all the way back to 2019. You can watch the webinars. You can see how we called the bottom of COVID, how we called the top at 2022 before that little downturn we had in 2022, and we called the bottom of that. Just that itself, right, makes you a lot of money. But that's not what it's all about. Market Outlook is about training you to understand price movement of the indexes so that you can trade them more effectively in any time frame, whether that be a 0 DTE time frame or a 70-day time frame or anywhere in between. And also, you can also time your long-term investments better that way too. Lots of powerful stuff. Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week. And once you learn to understand price movement, you can really do this with any asset. You can do it with Bitcoin. You can do it with, Apple stock or whatever. So it's all very great information to have. And again, my purpose here is not to tell you for sure where the market's going this week. My purpose here is to help you understand how to identify price movement so that you can make better decisions on your trading and make more money more consistently, especially once you get into the other aspects of understanding positional management and so forth. So let's move forward. So the first thing we'll do is I'm going to talk about what we talked about last week and what the price action did. And then we'll move on. So this week we'll start with the SPX. So last week we were talking about we wanted to buy any kind of dips because our thought was that the market wants to go up. And we can see that last week we pulled down early in the week. We came in right into our primary support level, which was also our 16 delta implied volatility level. We set in a bullish candle, tried to retest the bottom on Thursday, and then took off on Fridays. Everything stayed within expected ranges in this asset, and we had a nice strong breakout. And as for today, we're coming up and we've completed the U. So we talk about this over and over again. And we also talked about too that we were considering this as like a cup and handle, even though the tops of the cups were a little offset. Came in here, we retested this here. Normal movement at this point is to have a minor pullback. We're seeing this in the futures on open. A little bit of resistance here, and then turn around and go higher. We'll take a look at the implied volatility numbers for this week and see what the market is thinking, or at least the implied volatility market. So this is our setup for this week. We are currently at 64.66. We have a fairly normal IV setup here. It's more, it's not like super bullish IV setup. It's like a not overly bullish IV setup, but it's somewhat normal. So we have a larger space to the bottom than we do to the top. But this is a little bit more towards fairly high confidence we're not going to exceed the upper level this week. Most likely movement here is, well, first of all, we talked about this, right? I kind of considered this a cup. Expected a 1/3 pullback, which is going to pull into here. Bullish candle. Breakout of downtrend. Expected move basically to about here. Came into that area on Friday. Right? Came into this area on Friday and we kind of pulled back off a little bit. Normal movement is to pull back a little bit off this level. So probably into here, usually about half candle, which is where they're putting our daily IV level, then switch in and run higher. That's the most normal price movement that the asset would have at this point. The implied volatility market is thinking that it's more likely we go a little bit deeper in the pullback. Whether that happens or not, we don't know. The IV market is looking like we might try to cycle sideways a little bit more. This is my thought on most probable. So most technical move is to pull back into here and then go higher. Right? That's the most likely move. The second most likely move is to pull back a little bit deeper and then go higher. And whether we pull back a second time off of this, we don't know. But to pull back and go higher. So those two are the most likely scenarios in ahead. Thinking longer term, we have got here a little bit. A price pattern target up here at, and this is going to be a zone price pattern target, right? Because sometimes we have, actually, no, this is pretty precise. So we have this swing low, we have this high, we have this big cup that's in play right now. That cup breakout puts us at our price pattern target here. It's our 50% level. We exceeded our 50% level, but we held it on both pullbacks. We set in this cup pattern here. That cup pattern is going to throw us into, right, this cup pattern pullback is going to put us into this area right here. And that's going to be a highly probable move. Not necessarily going to happen this week, but this is where the market's going to want to go. We'll call it 66, 65 over the next couple of weeks. And as of right now, everything is bullish bias. There's really nothing telling us that we're likely to drop out here. We do want to keep in aware, right? We want to stay aware of the news conditions and how those news conditions affect the market. Move the rectangle. Basically what we have going on here is, like, I'd pay attention to like this trend line area here, pullbacks, which is going to coordinate with this level and this swing low. So if the market pulls back to this zone here, it's going to want to try and bounce, and that it's no coincidence that it lines up with the 16 delta IV level. I would buy this pullback. If this fails, kind of tells us the market's going to more longer term want to be in a more sideways range, and this is a good buy point here. And then if something happens, we get some kind of news event and this level fails, that's not good, right? At that point, we would start projecting down moves into here. So one thing about technical analysis and understanding market movement is that this is not like, oh, the market's definitely going to do this. It's like what we call an if-then ladder. So there's if-then movements that happens. If this happens, then that should play out. If that happens, then that should play out. And if they keep switching back and forth, the market's confused, right? So we want to be aware of that. If this breaks down, this is like the determining level that is going to say, hey, there's a problem here. If this breaks down off of here, you're basically looking at a move down to this swing low. And if it breaks down hard, we're probably coming back down to our base level, we'll call it, which is right down in here. I don't believe that that's likely. That should be very unlikely. Our most likely move is, like I said, either we run back half this candle, or maybe we test this swing low and then we go higher. That's our most probable move. How do we know it's breaking down? A break of trend line, speed to the downside, breaking this swing low. We're definitely coming down to this level at that point. Well, I mean, you can't say definitely, but a very, very high probability we're coming down to this level at that point. We break and hold that level for the day, we're probably coming down into here. So that's basically my thoughts on what the SPX is doing at this point. And yeah, I would tend to buy pullbacks still, even intraday pullbacks that pull down. And let's see, I'm just going to, I don't want this to get too messy, so I'm just going to take out some of the stuff that we put in here. We'll take a look at some of our other assets. We'll see what they're doing. And if anybody has any questions, feel free to put them into the chat. All right, so let's take a look at let's look at the NDX. So one of the things that I want you to see is that the SPX tends to be like our most stable asset most of the time. In other words, its trades pretty technical a lot of the times, and it's usually like the average of the other assets. So this here is almost at its all-time highs, right? It's very, very close. Our NDX is not. NVIDIA earnings this week too, by the way. So that might be a good play there for the guys who play earnings. But the NDX is weak in that context compared to the SPX. So the SPX is up here. The NDX is down here. So it's a little weak on from that perspective. This thing here is just kind of putting in a sideways zone right now. For my bullish thesis on the SPX, I don't like that the NDX is weak. I guess it's a little bit sideways, right? So channel it. So this is a slightly upward sideways channel that we're running here. This is pulling back this morning. Probably going to retest this swing low or here. So I see this as like probably a decent buy point for the market, right? Because we have that level there. We have this level here. We have earnings that if they come out bad, like if NVIDIA earnings don't meet expectations, we're probably going to come down and retest this swing low down in here on NDX. If they do and they exceed, it's probably going to shift higher. I'd like to see NDX hold this channel. I really don't want to see NDX break down to the swing low. It's going to be like weakness for the whole market, and I want to take that in context. So one of the things we do here is we do like cross index analysis. NDX isn't really sharing the strength picture that I see in the SPX, and it's not really sharing the strength picture that we'll see in the other two indexes when we take a look at them. So this could be like a rotation where people are selling off or not buying tech and buying the small caps or instead, and the big caps, right? Because you'll see those are the strongest indexes right now, relatively in the shorter term timeframes. That's a possibility, certainly. For some reason, the tech sector might just be a little weaker than everything else, right? So there's different things going on, different reasons why that might happen. But it is showing weakness here. And realistically, I'd like to see all the indexes at the same point. It's like the NDX really shouldn't pull back here. We came in, we tested our swing low. The move Monday was relatively really, really light. It might just be investors waiting for the earnings coming out this week and so forth. So there might be other reasons for it. But I have this, I want to watch this. If this really starts to break down, that could be a early signal that the SPX is going lower. Again, I'm not expecting that. I'm expecting any pullback on this to be relatively light. I'm expecting this swing low to hold. If it doesn't, I'm expecting this breakout to hold. So failure of this breakout would be maybe a little concerning to me. But I wouldn't put too much failure of that. Yeah, we really shouldn't break this swing low. This is a buy point here. This is a buy point here. Let me go back and let's look at more charting here. Yeah, that's a good buy point, and this is a really solid buy point. I wouldn't expect that at all this week, but if for whatever reason the NDX happens to get here, this is like a super buying opportunity, you guys, to go long in the index. Just pull this out. We'll let that go, and also notice trend line where we're at with this trend. So James is asking, when markets fall, do you have a plan for scaling in as market reaches progressively lower support levels? Do you plan to increase invested as price goes lower? Yeah, so a lot of times it's very situationally dependent, right? So like the markets are high right now. So when I pull back, I'm going to tend to like if you look at the overall context of what's going on, and I can do this in a different context, right? This is our long term, right? This was our, like in the NDX, for example, because this is where we are, right? This was our buy zone. Like we talked about buying this in 2025 when the tariff news came out. This was our buy point. When we talked about this pullback here in July, this was our buy point, right? When we came here, right, this was our buy points. This was the solid buy point off of that. Like in a similar context here, this zone here is an area that really should provide a good buy point. So my strong buy point here is like I would go midpoint. You know, unless we have something going on like the pandemic or I mean like something super big, like a financial crisis crash or something like that. Financial crisis crash is going to put us here. Right? That's going to put us down here. But barring anything like crazy news event that's like really super crazy, it's going to bottom here. And this is my buy point. Like I would be pretty aggressive here at buying, assuming the news was, like I said, not overwhelmingly bad, like the world's going to shut down because we have a pandemic going on type of thing. This is a very, very strong buy point for me. Okay. So I'm going to look at my weekly charts for that. When my hourly charts start really breaking down hard, I switch into my daily charts. When my daily charts start breaking down hard, I switch into my weekly charts. We don't have any really strong weekly support until here. This is the buy point for that. So if we start really crashing down fairly hard on the dailies, this is where I'm going to want to go. And I may scale in early because I know on my dailies, I have a pretty good support level here. So this is a scale in point. This is a scale in point. This is kind of weight. And then I get, into this zone in here. I'd be fully in, down in here, like at 2130 if we go down there, right? So that's probably how I would scale in here. In this instance, right? If we're just already down here, like if something happens today and we pull down into like 2200 on Tuesday or whatever, right? Something crazy goes, I'd hit it fairly hard here, right? Because what you have is you have this price pattern, and this is a rough estimate, but this is my topping pattern in the market right now. So the NDX is putting in a topping pattern, right? Sort of. It's kind of borderline, but it looks like a topping pattern. Like if we hit a lower low and we swing back down into the swing low, it's like I'm projecting forward. I'm saying, oh, it looks like NDX is putting in a topping pattern. That topping pattern may never occur, but assuming it does put in that topping pattern, that gives me a price pattern target out here at 21,420. This is my buy point right here. It's a nice strong buy point right there. Also coincides, right? Because it coincides with, we're looking for a compilation of evidence, right? So I'm at a price pattern target. I have a topping pattern. I'm at a price pattern target for my topping pattern. I'm at my 200-day moving average. I'm at my midpoint of my cup, my big cup that I have here. That is like a really strong buy point, right? So those are where those are the things we're looking at. Okay. Hopefully that makes sense. So long time low ATR odds increase. Jed's just asking a question. I'm trying to read it. It says long time low ATR increases odds of a big move. Sometimes I don't correlate really anything with that. I mean, eventually the market's going to break out, right? We have this normal, like if you look at a Bollinger Band type of an indicator, you have, the markets, they expand in volatility and then they contract in volatility and then they break out of that contraction and they expand in volatility and they contract implied volatility. And if you look at John Carter, that's his whole trading method basically, right? So yeah, I mean, when they consolidate in a tight range, they're eventually going to break out, right? So we are here. You don't know how long that's going to be necessarily, but we come up into a move, we go into a tight range, we break the range. We have these big moves, we go into a tight range, we break the range. We consolidate here, we go into a tight range, we break the range, right? That's just what the market does. It does play that cycle over and over again. It's hard to say how, like from a general statement, how long that typically lasts. You can go back and you can look at the past and you can say, oh yeah, a sideways consolidation usually lasts, I don't know, 30 days, whatever. And we do that too, like we've done that in the market outlook in the past. We kind of compare that and say, well, it's due to break out, but it still could stay there for another 2 weeks. We don't really know necessarily. This does tend to be a bad time for condors, right? Because if we've been doing sideways for an extended period of time, generally a lot of times it is going to break out, right? So you have a valid point there. A lot of times it generally is going to break out, and when it breaks out, it usually breaks out fairly hard. But that's when people are most invested, right? They'll take this trade and they'll win. They'll take this trade and they'll win. They'll take this trade and they'll win. They'll triple size because now they're confident, right? This goes back to our standard Go membership education. If you've won 3 times in a row in a tight range like that, chances are it's going to break out. You shouldn't be maximum sized, right? And it's the normal tendency people have to say, oh, I have confidence now because I won 3 trades and now I'm a great trader and my trading strategy is wonderful. No, you just happen to be, matching the market environment. And then Chris is saying, yeah, no premium now. So I'm getting very little premium. So I'm paying a lot to get into my position. I'm oversized. Then I get the break, and then the loss gets fairly large, and then I'm oversized, and then I freak out, and then I drop my size, and I trade like I'm not going to say it, a scaredy cat, put it nicely, for the real opportunity. And then you don't get back in again until it calms down again, right? And then you run through the same cycle, right? So that's the cycle of doom, as they say, for a trader. It generally doesn't work out well for people, but yeah, you definitely want to avoid that. And that's a good observation. So thank you for pointing that out. All right. So anyway, NDX. What drawing do I have here? I think I put the day weekly numbers in here, or maybe I didn't. I got to go to default. Yeah, it looks like it did. Yeah, so as far as the NDX goes, AV levels are expecting this low to hold. Technically, I'm expecting the same thing, right? This is one of the things I like to do to self-check myself. It's like, where's the IV market think that the market's going to hold? Oh, right here. That correlates with my technical price point swing low. That makes sense. In that context, we're pretty much the same as the SPX, right? The SPX IV market put it at the swing low. So it thinks this market's going to hold the swing low. It thinks the SPX is going to hold the swing low. That's good. Where's it put the high level right here at previous all-time highs? That makes sense. Our IV levels are really tight on the top, a little open on the bottom. Kind of tells you they're fairly confident we're not going to exceed that level. Meaning that, oh, look, we're pulling down this morning. Whoops. Here, we're pulling down this morning. We're going to get some sort of retracement. Generally, I would expect this to hold. Like in my short-term charts, this is my support level. So I would expect this to hold down in here, and then probably bounce and then go higher. This is going to be a pattern. This is going to be a pattern. This is going to be my pattern target. I bet it comes out right here if we do the math. So this is still the most likely move here. Slight pullback to, let me erase this here. Let me go into just an hourly. Right. Do you see our support level here in the hourly? It's basically right here. That's this 23,287 level. So that makes a normal pullback. Right, you can see it. I like doing different time frames because you can see more clearly. This is like a completely normal pullback. Then we have a breakout. Then we have a pattern. And that pattern target's going to be here. And I can right, this is like normal shit. Whoops. Come on. Right, that pattern target's going to be pretty much right here. That's the most likely move for the index this week. If we break down into here, that's fine. That gives us a higher, it just puts us in, like in this time frame, it puts us in like a double bottom type of a pattern or a bottoming pattern. And when we break out of that, we're going to have a bigger target. So right now, this is what we have. Right, so this is where the if-then ladder comes into play. It's actually more powerful if we actually break down from that. So if we break down from that, that puts us prime for a retest of somewhere in this range. Let's just say here, this is a good buy point for the market. That is going to imply that I'm going to set in something like this, right? And then this is going to be my bottoming pattern. If that plays out, then I'm going to have this pattern playing out. I'm going to switch it and notice where my 50% level on that is. It's right here. So most likely move at that point is going to change. It's going to look something like a breakout, some sort of a pullback, probably about half level, and then go higher and into our price pattern target. Right, so that changes the path. Why is that important? That's important with our longer term trades. Like when I'm in a condor or I'm in a broken wing butterfly and I'm just trying to decide when to adjust and how aggressively adjust and when to adjust and all this other stuff, right? When all that other stuff is coming into play, by understanding that if I pull back to here and then break out, I'm probably only going to here is right? And it can allow me to make adjustments a little more aggressively in certain places, less aggressively in other places, or maybe not at all, or maybe a little bit early, or maybe a little bit late, right? If I understand this movement and I can make money on my adjustments rather than lose money on my adjustments and so forth. So let me clear this. I don't want to get, okay, so we got a few more minutes here. So let me just kind of speed up what we're doing here. Let's go to our dailies here. Let's go into, let's see, Chris is saying, prefer somewhat directional at this stage, consistent with the trend, but with risk management built around key control points we're discussing. Yeah, I like to be a little bit on the directional side. Like, you don't have to be completely directional. You can lean things a little bit, right? So especially, a lot of people get into the market neutral trading because they've figured out that they don't understand price movement. And just because you don't understand price movement, it doesn't mean it's not understandable. It's just it means that you don't understand it yet, right? And that's what people give up, right? They give up and they turn around and they go, oh, I just have to go completely neutral and go buy and try and trade positive theta, right? And I mean, you can do that way and you can make some money that way, but you can make so much more money, so much easier if you understand price movement, positional management. And, as you start to begin to understand this or start experimenting with it, we're just doing minor shifts. It's like, yeah, I usually adjust at, -2 delta, but this time I'm not going to do that. I'm going to let it go a little bit further because the market's more likely to come down. So I'm just letting my delta guidelines be exceeded a little bit, right? Or maybe maybe I usually adjust to neutral, but this time I'm adjusting to more positive delta because the probabilities are the market's going to go up, right? And you can make a large improvement in your trading just doing that. And it's a good way to practice it without getting hurt too bad when you're not right, or maybe the market doesn't do what it should be doing, or whatever, right? So that's a way to do it. And then when you get really good at it, you can do that much more aggressively. So anyway, thank you, Chris, for the comment. Let's look at our other assets really quickly. The Dow. Nice breakout in the Dow right into our level here. And again, most likely price movement off of this breakout, especially since it was such a strong move, is for us to try and kind of retest this support level. I would give it all the way down to here before calling it a breakdown of that level. We get a breakdown of that level, then this is in play. If this is our primary, basically, support zone in the asset. I don't think it's going to happen. I think this pullback is normal. It's only what, 80 points? 80 points off of this is like 45.5, which is not even half of this candle. Most likely our deepest pullback is probably just going to be to this zone here, these swing highs. And then from here, we're likely to push up to the next level, whatever profit target is on this little pattern here. Probably 50% of this zone. So I'll be here. Right, so I'm going to have, okay, so this is 50% here. Yeah, so our next move on this asset's going to be about 47,750 once it 46,750 once it breaks out. That's the most likely move. So we usually come to our 50% level, which is, right, this is our pattern, this is our breakout. This is our 50% level here. We usually come to our 50% level, we usually back off and go to our target. That's most likely price movement. Again, breakdowns to here. Well, we might go here. If we do that, that just gives us a slightly bigger target, which is going to be right around this area here on the asset if we get the bigger breakdown. Of course, if we cycle all the way down into here, then the rest of the markets are probably going to follow as well. But that's most probable. So quickly jump into NDX here. Not NDX, but the Russell. This is not all-time high area in the Russell, but this is a nice strong breakout into our upper zone. We have price pattern targets up into here. We talked about this last week. Remember, we said that when the Russell goes up, it's probably going to more or less match the SPX pace rather than its regular half the SPX pace. And we got our, what was it, 90 points on Friday. We got like 85 or something on the Russell, right? So that is pretty much matching the SPX's pace. It's moving at twice the speed that it should. Not a surprise. And of course, according to the NDX, everything's moving much faster than the NDX to the upside right now. And again, that's kind of a sign that either the traders are pausing a buy of the NDX assets or they're rotating out of them. It might just be a pause because we have tech earnings this week, right? So that's fine. Here, with such a strong day in the Russell, it's probably going to pull back a little bit. Minor, but basically the same concept, the same theme in the Russell. Pullback maybe at a swing high on a pullback, maybe into this level right in here. slightly into that pull high, and then launching higher with our price pattern target being up in here. This isn't my, let me look at the IV levels. Let me go to the right chart. Let me clear drawings. Let's go to, let's go to last week. So this was our implied volatility numbers last week on the Russell. Notice the pullback on the Russell did not go to its weekly level like it did in the SPX. It held a little bit higher. Actually, maybe this was 2 weeks ago. This may have been 2 weeks ago. I'm going to eliminate that because I may have goofed up when I did the market outlook. Let's just look at normal price movement and forget about that for a minute, right? This is our last level right in here, right? So you would zone this in to here, to here. It's basically our support level on the Russell. If you watched the pro meeting last week, Stephen and I were talking about 2260 on the Russell for a number, right? So 2260 is basically right here. My thought being that we are going to hold 2260 on the rut. And you can see we closed above 2260, we closed above 2260. This is our buy point. This was our buy point last week on the Russell. Of course, if we were long here, that paid off for us, that big move here on Friday. And that is how that played out. So let's look at movements for this week, and then I'll look at the comment. We'll quickly look at IV, and we'll close this up because I have to get to the next meeting. This week, so we over projected our IV levels a little bit last week in Russell, and then our daily range for this week looks like this. A pullback to this low would be normal. Notice that the IV market isn't even pricing in a pullback to here. They're not even pricing a pullback to here for the day. They're only pricing into here. Normal would be here. If it doesn't get there, that's pretty strong. And then we continue higher. So this is a bullish breakout, and I would tend to be long here. It looks like even on the weekly level, they're not even breaking the candle here. So it's only into this zone here. So our expectation here would be that a pullback would be minor. Any kind of pullback would be minor. We're going to break higher, and we're going higher. This is a really good number for the Russell to be at, right up in there. Let's clear this. I'm just going to back out a little bit. This is a really high probability number for the Russell to be at, which is near all-time highs. We'll see if that happens this week or not. The rest of the market looks like it could go kind of like we got a little bit of weakness in the NDX. We should be up. I don't know that we're going to be up to the implied volatility levels this week, although the implied volatility level is pricing for that. Notice we have an inverted implied volatility structure on the Russell. We have a bigger gap on the bottom than we have on the top. But this week we have a bigger gap on the top and the bottom, and it's substantial. So they're really like this lower level is only here because they're trying to price for this level, meaning that this is probably going to bottom out before we even get down here. And there's a strong possibility we're going to be up here. So most likely price movement this week looks something like that. All right, so let's move on. Of course, watch for news, watch for new breakdowns. I got a couple questions. Yeah, futures versus fair value. Minus 17, NASDAQ futures fair value is minus 71. Yeah, so this is something that you want to be aware of, right? So this number, and I think most of our regular members know this, but this number here doesn't mean that we're opening down 17. There's a fair value number, so the futures can trade differently from the fair value for multiple different reasons. So if this is minus 16 on the futures, fair value could be significantly different. And George is telling us it's minus 71, which is fine. That's 71 points down on the futures. And you can price that in. But even that's not a significant move on the NDX nowadays. And again, normal pullback. So But you should be aware of that, right? And that's good to point out. I realize we have some newer people here. And just quickly, just look at what the VIX is doing. Not that I pay much attention to that, but VIX is very low, right? So we're at the lower end of our range, which tends to be a dual-edged sword. Like, let's see, who pointed this out earlier? It was Jed saying basically a long-term sideways movement creates the likelihood of a larger move. Usually when you get a sideways consolidation or an area of low price movement, usually implied volatility or VIX drops to an abnormally low number. And then once it hits an abnormally low number, then we kind of read this chart like a regular chart. Like once it gets into this zone here, that's a support level. And it's likely to bounce. So usually by the time the IV gets down here, usually it's time for the market to break out. And even if it breaks out to the upside, you'll get a little bit of an increase in the IV number, right? So those are just valid points, but there's no indication here that there's an issue at this point, which is a dual-edged sword. It can provide comfort to some people, but to me, it's just like, oh, well, that means it's riskier to get into positions because they cost more. So Russell's just kind of in the middle of things here. Because of the speed of the move, the IV is going to remain a little bit high, and that makes sense. Just Chris is saying we have price pattern targets on the Russell at all-time highs. Yes, we do. I would expect that relatively soon. Might be this week. If not this week, probably next week. Unless we have something significant change in the tone of things. And the other thing was going to be we sometimes look at IV skew. Although again, because of the speed in the Russell, because of the speed of the market and move, sometimes it holds IV levels, term structure, a little bit high or a little bit flat. But let's just see where they're at. Go into here, go into 2025. So on the 15th, this is what we look like. This is how things progress over the week. So we're at about, well, this becomes irrelevant because it's going into expiration. So we're at about 18.4, and we're about 9% into, right? So I'm looking at this number, and this 9.2% represents the difference in here to here. That's kind of the area that I'm looking at. There are all my drawings. And I can just basically see how the week went. So that's Monday. Whoops. Back. Go multiple days per graph. Tuesday, Wednesday, Thursday, right? That disappeared, and then Friday. So notice IV is actually up on Friday. That can be due to speed. Even if it's up, it'll hold the IV up. Because basically implied volatility, people think it's fear, but it's really not. It's expected move in the asset, right? So if you have a very large expected move, people buy options. If people buy options, that by default increases the implied volatility level, right? Increases the price because due to supply and demand type of dynamics. So everybody's buying options on Friday. Doesn't matter whether they're puts or calls. That's going to jack the extrinsic value in them, which if I by default increases your implied volatility. So it's more of an indicator of market speed than fear. Good understanding to have. That said, sometimes we'll call it a fear indicator. But anyway, that's why it's up. We've got a big move, not necessarily because there's fear in the market. So that sort of makes sense to me. I would expect this to drop and go more into contango, deeper into contango, which I don't want to make that tie in here. But I got to go. So it's time to get ready for the next meeting. So yeah, anyway, I'm still bullish. Implied volatility, in my opinion, is bullish. Everything's pointing towards up moves, even though we're getting a bit of a down move in the morning. To me, that's more of a buyable event. So with that, we'll close this off. We'll see you on Trading Market Open. And for those of you who are in Pro Membership or in the Pro Membership Open House, thanks everybody for joining me. Hopefully you guys will consider joining Market Outlook. It's really your next level in trading. If you're doing well with your market neutral trading, then you want to increase your performance drastically, this is where to go next. All right, trade well, everybody. We'll see you in the next meeting.